Boy, that's a good snappy little tune to get the morning started. So today is November 20th, 2023. I'm born to be. That's the head of trading at Rosemont Seneca, Mark Putrino. How are you today, Mark?
Well, if I was really the head of trading at Rosemont Seneca, I'd probably be retired by now.
And you wouldn't be using your real name.
Yeah, it is true. Or my real email.
That's right. Good morning, guys. Hope
Well,
everybody's doing well today. Ready for a great Thanksgiving week.
yeah, dude. So woke up this morning. Look, my backyard. There was 5 deer out there, and
Oh, yeah.
it's amazing how well they camouflage. It's like the time of year where the leaves are kind of turning brown, and it's like, I mean, you could like barely see these things. It's really just kind of amazing.
You've
Um,
never hunted, Mark?
nah, I'm not a hunter. I mean, I'm not against it, but it's never something I would do. I just feel bad. I would feel bad if I killed a deer, or whatever. So
Well, you eat
I
it.
don't mind eating them. I just don't want
That's
to
what
kill
I
them.
mean. You eat it. You don't kill it just to go kill it. You kill it to eat it.
Yeah, yeah. Well, that's what I'm saying.
Yeah, yeah.
Um,
They're
yeah,
incredibly difficult if you don't know what you're doing. Takes a while to learn too.
yeah. They get these bow hunters here because we got the preserve, and they come and they wean out the crowd, and and I don't know. Every now and then I'll see a deer, like a wounded deer with an arrow in it because they didn't actually
Yeah.
kill the poor thing.
Well, that's just bad archery skills.
Yeah,
But you have to hold the curve, or they'll get too invasive, and then they'll be everywhere, and they'll be hitting people's cars, and it's a
yeah,
mess. So you have to let people hunt them.
yeah. Well, it's like a friend of mine says, getting killed by a hunter is not a bad ending when you're a deer because it's not like you're going to die in a hospice, surrounded by
That's true.
family and scented candles and so forth.
That's right.
All right. Anyway, so I would say the two themes going on that I'm looking at in the stock market is rates are trending lower, which is bullish, but everything, well, not everything, but big parts of the market here are like overbought. So that could kind of put a lid on it. And what are we doing this morning? I mean, this morning we're like doing nothing. And then, of course, we got Thanksgiving week this week. So it's going to be a short week. So I don't know if we're going to see too much happen this week, but these are just a couple things to watch here. A really good example here of how we run into resistance at a level that was a former peak. It's not a coincidence. And it's really kind of amazing. People take it for granted, but think about how many things have to come together for this thing to find the exact same precise price here as it has over the last 4 days. And if you think about how big the economy is, this is trillions and trillions and trillions of dollars, and yet somehow we get these precise levels. Like what was here, 436 was support. Then there are people who bought that once it goes lower, like and when it gets back to their price, 436, they're like, all right, now I can get out at break even, so I'm going to sell. So we get this conversion from support to resistance. But anyway, we're overbought. You can see before I go on, you can see the same conversion back here. Support here became resistance over here. I mean, if you look at a chart, you can see kind of multiple examples of different phenomena, because it's just what happens. The support becomes resistance. Support becomes resistance. This is a support becoming resistance is a characteristic of a market that's going lower. So when you got up here, the support became resistance. And notice how this peak formed at a lower level than this peak. So that's your lower high. And then this peak formed at a lower level than this one. And then that precluded a big move lower. So I know hindsight's 2020 and so forth and so on, but learning these patterns is a good thing because they're going to reoccur again and again and again. And as long as humans have emotions and humans are trading markets, these patterns are going to recur. Like I was watching a pretty amazing show yesterday on I think it was Ramses the First, who was the Egyptian pharaoh. And when they uncovered the tomb of all the Ramses, like back in like the 1880s, I think there was one mummy that was missing, and it was the mummy of Ramses the First, and they were never able to find it. And they figured out that tomb raiders just kind of probably stole it. So then in like the 1980s, there's this woman who is this professional archaeologist, like professor, up in Canada, and she goes into like one of those side of the road, like freak show museum type places. I don't know what you would call them, where they sell off like the oddities or whatever. And she goes in there and they got the mummy. And because she was a professional, she was able to say, like, this is a real mummy. And with the DNA, they figured out it was Ramses II. So no one knows how it got from Egypt to a sideshow in Canada. And then they ended up selling it to some museum for $2.7 million. But I was just thinking, whatever the Egyptians were trading back then, corn or, whatever commodity, wheat, if you had charts of their stuff, you would probably see the same stuff that we see now, because human nature hasn't changed since then. All right. So anyway, S&P, remember, overbought, testing resistance. That's probably going to put a top on it, if not lead to a reversal over the next few days. And then I think the next thing we really got to focus on is our, this is probably a bigger focus, frankly, but here is our 10-year yield. And looks to me like the next stop here is going to be about 432, because we're in this like nice downtrend here. It's just trending lower. The sellers are lowering their prices, more than the buyers are kind of cutting back. But so we had resistance, right? And we know that levels that were resistance can become support, because there are people who sold who are going to be like, oh, the price is higher, I want to buy back. So yeah, now I think we're going to trend a little bit lower, but so that's bullish. But I think the overboughtness in the market is maybe probably enough to kind of neutralize that. So I don't know if we're going to see any kind of a big move, but I guess if we do get to the support and then rates start going up again, right? We know that a lot of times things bounce off of support because there are buyers who are watching this trend lower, and when they see it's not trending lower anymore, they surmise, oh, like say you want to buy it, you're watching it, it's coming lower, 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 lower. And it's like, if it's trending your way, there's no need to buy it. You can just wait and you'll end up getting a better price.
Mm-hmm.
So these buyers wait, and all of a sudden they notice, oh, the price isn't going lower anymore. And they start to get nervous they're going to miss out, and they start to jump in front of each other and they outbid each other. It's like a bidding war, like on storage
wars, yeah,
or they just start outbidding each other. So it's important and then of course the opposite is true with selling off of resistance. The sellers notice the price isn't moving any higher, so they assume there's new sellers coming into the market. So it's most of the time this stuff is moving just because of the psychology of what's going on with the people that trade it, as opposed to whatever they're trying to attribute it to on whatever your market media du jour is. That was a really interesting thing you sent me on Stansberry, dude. I
wasn't it
about Whitney Tilson, because that was kind of after I left, but
yeah, I watched that whole thing and I was like, wow, this is not the stock market jobber. It's not what we need to be.
No, but again, well, yeah, the guy does live on a 200-acre farm.
Yeah, but there's I don't know. I've always believed in ethics in business, and you have to be ethical in the way you do business, and you have to treat everybody in the manner that you would want to be treated. That's the whole reason that I've always been successful, is because they get me, the genuine me, every time they talk to me, no matter what.
Well, you know what a big problem is, right? The institutional investment industry where I come from is extremely heavily regulated, right?
Mm-hmm.
And you're not allowed to send you're not allowed to send anything out, any email or any kind of correspondence, unless the compliance department approves it. It's like if you send a letter to a client without getting the compliance department's approval, it's like you'll get fired. It's like a serious thing. But in the publishing world, things are protected under the First Amendment, so it's a whole different ball game. But I think it's kind of changing now. But yeah, some of that stuff was just kind of ridiculous. Like
The
I never had heard of this until
14,000%
they found it.
gainers and shit. That's crazy, man. The fact that people fall for that is just really sad, basically. But I mean, I can see it. You know, you write out a really great pitch and you have a look, I found this 14,000% gainer for $14.95. You can learn what that is. But I don't know. I like the way you do it, the way you teach people how to trade the market by learning levels and price action. And it becomes simple. You don't need all this extra shit. Excuse my mouth.
Yeah, dude. Yeah. Yeah. Well, anyway, I just thought it was kind of interesting because they said he ran a hedge fund and it was $180 million. And that might sound like a lot of money to you and me, but in the investment industry, that's like a mom and pop shop.
Yeah, that's nothing really.
That's not, I mean, the first firm that I was, or one of the firms, the last firm I was a head trader at, when I joined, it was like, we managed like $3.5 billion. So, but anyway, all right. So here's the next thing to look at here. This is our tech sector. So what we're trying to see now is this market going to start to, SPY's gone sideways, right? So obviously we want to figure out, is it going to go up or is it going to go down? Because it is not going to go sideways forever. So we saw it was overbought. One of the things that could make it go down would be if we got to that level in the treasuries and then reversed, right? Because higher interest rates are bad for markets. Another thing to watch here is our tech sector here. Resistance, will it become support? Because this could be another thing that would be the opposite. So this would be a bullish component. So it's kind of like there's going to be, a couple different things going on here. And it might have to wait a little bit to see how it plays out. But as we know, resistance turning into support, resistance turns into support. This is something that happens when markets are moving higher, right? So resistance, support, resistance, support, resistance, support. So if resistance becomes support, and over the last couple of days it has, but this is not a precise thing here, and we're going into a slow week, so maybe things will kind of play out a little bit slower. But if if the yields start to rally, meaning bombs sell off, at the same time that this tech sector starts to kind of break here, and if rates rally and all of a sudden XLK starts to take this out, what should be support, well, then those are two negative things that we're looking at. Mm-hmm. If in the financials over here, they have a very similar situation to SPY, right? Overbought and at resistance. So there's people who bought back here who want to sell because they just want to get out at break even now. So this is why we find resistance at former resistance levels. Markets run into resistance at former peaks. And it's not just, a saying or an old wives' tale or whatever, although there is a lot of truth in old wives' tales.
Absolutely.
But like in this one, people say sell at former peaks. There's nothing scientific or strange about that. It's a way of saying, hey, when a market gets to a former peak, there's a good chance there's going to be resistance there. So those are probably the three things to watch. Let's go through these other sectors though here.
Got a pretty big question here from Avi. I don't know. That may be a whole entire video.
Yeah, that's, the answer there would be just to either some kind of a call spread, or I'd have to really think about it. But covered calls, you would be in the world of spreads there though, where you would be selling things. So I'll look into a little bit. And I know it, but it would just kind of take me a while to explain it. But basically, you're selling an option and you're buying an option, and ideally, the one you're selling, you're going to receive a little bit more money than the one you're buying. And then if the position expires worthless, well, then you get to keep it. So it could be, it's not as sophisticated as it sounds.
Right.
But selling credit spreads is probably something we could follow up on. And there's probably in my options lessons, that's going to be in there somewhere. It's so long, I don't remember where it is.
It's about halfway down.
Yes.
Strategies.
So check out the options in the options lessons there. You should be able to access all that for free. And if you have any questions, just let me know.
Here, let me put it back up so you can find it.
What's that?
And put it back up on the screen so they can get the link to it. So that's just the web address. Put it in. You get right to the options course.
Did you posted it?
Yeah, it's on the screen.
Oh, okay. I see it. I didn't see it in the chat. I see it in the screen.
Yeah.
Okay. All right. So now let's take a look at this. So here's another thing that could be at an interesting vantage point here. This is our healthcare sector. So we're at resistance. We got this potential ascending triangle pattern, and these tend to be bullish because they show that sellers are just hanging out while buyers are becoming steadily more aggressive, meaning they're willing to pay higher prices. So this combination of like chill buyer or chill sellers and aggressive buyers could set the stage for a move higher. But probably what trumps this is just how we act at this support level. Because if the broader market starts to kind of fall apart, if financials reverse and tech reverses, then running into resistance will probably trump this, right? And this will go lower. But if those sectors stay flat, then this ascending triangle could play out. And you could have a decent move here because we had our fast move down. So we're at support just beneath price levels that we made a fast move through the last time we were here. A lot of times when you make a fast move through a price level going one way, if after some consolidation you come back the other way, you make a fast move right back through it. And that's because if you make a fast move or if you gap, you don't spend a lot of time there trading at these particular price levels. So because of that, there's not a lot of vested interest to form. I mean, look at this. It's like perfect, right? Gap down, and then we made a big rip right back up through these levels here. So there's not a lot of people who bought in here who are trying to sell to get out at break even on the way back up. And then here we have the opposite. When we rip really fast, we don't have a lot of people who are selling who are remorseful. We're going to try to buy on the way back down. So sometimes we get into these price ranges where we stay in them for a while, and sometimes we just rip right through different price ranges. But anyway, so that could be a potential bullish thing to look here. So you see, it's like we're at a really interesting vantage point here. I think consumer discretionary is gapped up, but it's kind of just consolidating. So yeah, it doesn't really look like much is going on there. Industrial sector. Yeah, here's another sector that's testing resistance. Now look, see how the last 4 days. So it's not just today; it's the last 4 days. So this isn't a coincidence that this thing rallied and ripped really hard here. And what do I hear?
That's me, Hero. I got.
Oh, I was wondering if I heard Clifford eating like that.
No, it's the family.
All right. So yeah, so it's not a coincidence that this is where we ran into resistance. It's a former support level. So we know there are people back here. Now, it's pretty amazing, again, that you have trillions and trillions and trillions of dollars here, and yet somehow we just amazingly find these precise levels. Like here, 97 for support. See how we get to support and we rally? It's because of those anxious buyers trying to outbid each other. You got one in here. But it's not a coincidence that this is where we just happen to run into resistance. It was a former support level. So, I don't know. It looks pretty clear to me. Some people might just say, well, a lot of people are like, oh, you chart people, you're like, whatever, us tea leaf readers. But if you know what to look at, this stuff completely makes sense to me.
Absolutely.
It makes sense if you realize how illogical people are. The market's logical if you realize people are illogical. Well, I should write that down, man. That could be a good one.
You need to write that down.
I think I just coined a new phrase there. But yeah, people are irrational. Anyway. Speaking of irrational, you guys see the Bills-Jets game yesterday? Man, it was like all these fights breaking out all over the place.
You know what I did see, though? I don't watch the Gators right now because we have a pathetic coach, and it's just really sad that they pulled this guy from Southwest Louisiana Tech and brought him in to coach the Gators. He doesn't. He's just out of his league, and they lost to Missouri. They were 70 yards from a field goal with 30 seconds left, and they played soft defense, and the dude threw 3 passes, and they kicked the field goal and beat them by 2 points with 10 seconds left, 28 seconds. And they were, and Florida had them. All they had to do was finish the game, 9th ranked Missouri, and they just blew it. It was just disgusting.
Yeah, well, they're better than UConn, that's for sure.
Yep.
Well, UConn won. They played Sacred Heart, but Sacred Heart's Division 2. It's just like an interstate thing. All right. All right. Anyway, now here we have our utilities, right? We also got this ascending triangle pattern. Now, here, these will continue to move higher if interest rates continue to move lower, or at least they should. And the reason why is because people generally buy utility stocks because they want yields, they want income. So if the yields are falling in the bond market, there's going to be some people who are going to sell their bonds and who are going to be coming in and buying utility stocks. And the same thing holds with the REITs, because people in general buy REITs for income. So this looked like it was making a little bit of a breakout. Now it's kind of coming back. But even though that this is highly influenced by interest rates, you can still see our support here, resistance there. NVIDIA reports tomorrow.
I watched a pretty interesting thing on the how lumber and everything is starting to come back to pre-pandemic levels, and so you've got a decrease in the prices, which means it's going to cause because the consumer demand is so low that you're going to start seeing the prices of everything come down, which eventually is going to fall over to the wages. Then the wages are going to catch up, and then the housing and everything. It's just fixing to be a mess, Mark.
Yeah, it's just I think we're just the biggest problem I think in this country is the healthcare system, and it's just ludicrous.
Well, insurance too. They're talking about doubling homeowners insurance here in Florida, where most people are paying $6,000 a year now. You're going to go up to $12,000 a year, plus your insurance. Your insurance goes up. Your mortgage insurance is going to go up. Everything's going to go up, and it's going to make it unaffordable to live anywhere.
Yeah, I hear you, dude. I hear you. Yeah, it's I don't know. Whatever. I'm gonna try not to let it bother me.
I just watch the market. We just play with it.
Yeah. Oh, it's Edwin Hubble's birthday today. So
really,
Hubble telescope.
Yeah.
I figured out was it the infrared things, the Hubble constant? I don't know. You got to ask your son. He would know all that stuff. I was an astrophysics major for about 2 weeks.
I think that's the way he's going to end up being too. He's not digging it too much. I think he's probably going to go into software engineering or something like that.
Well, when I was an astrophysics major for like 2 weeks my freshman year, I thought it was like you're going to be like learning about the stars and this is that, this is this constellation. And then, you go in there and it's like the guy's like throwing these calculations like, okay, here's how you calculate the weight of a star. It's like this like just incredibly complex math stuff. But anyway, so NVIDIA reports. Now, here's the thing, right? This is probably going to be setting up for a big move one way or the other because Heather said they report tomorrow. But I would imagine the options here are going to be pretty darn pricey. I was going to say this would be probably a good time to consider something like some kind of a collar or an option position that makes money if we go either way, a strangle. So you buy a call and a put. And the idea is you make more, you're going to make on one and lose on the other. So the idea is that you make more on the one that you make on than you lose on the one you lose on. But because NVIDIA is so popular, the option premiums are going to be so high. And the option market's not open yet. So I don't think we can get quotes, but just something to think about. Maybe there's another AI stock that we can find that would move in sympathy with this, meaning the same way.
Well, I'm next talking about Intel, which would be in the same group.
Actually, you know what? Before we look at Microsoft, let's look at Apple, because Apple's had a pretty interesting scene here. This is going to be in the newsletter that I'm working on this morning. But so Apple, biggest stock in the market in terms of percentage. I think it's about 7% of the S&P 500. So one stock is 7% of a 500 stock indice. So again, we're overbought. We're at resistance. Remember, we got people who bought back here who are trying to get out of break even now. So this is why we ran into resistance at a former resistance level. It's not a coincidence. And here, well, and we even have support back here. So support, not incredibly well defined, but I think this kind of makes it look a little bit bigger than it is in terms of the scale. But support here, resistance here, resistance here. And here we have our fast move down, fast move up, fast move down. So we fall right through these levels so quickly that we don't have a lot of time for there to be buyers who are remorseful, who are trying to sell on the way back up. And then we reverse again because we went through these levels so quickly. We didn't have a lot of time for there to be remorseful sellers who are now trying to buy their shares back. So perfect example here. This is like a textbook, like fast move down, fast move up, fast move down, overbought. Now, the reason why I'm looking at this is because this is going to have influence on Microsoft, and Microsoft is going to have influence on it. So let's go look at Microsoft. Yeah, I saw there was some kind of news, but I'm kind of so not on the AI bandwagon, man. I'm just sick of hearing about it.
Well, it's up $3.
It's like, yeah, whatever, man. You know, AI this, AI that. We've been talking. People act like it's new, but it's been around for decades. I mean,
I don't know that it's the fact of it that it's just coming around, but I think the fact is that, you know, we have the computing power now to actually make it viable. And the more you allow this thing to learn, the more, you know, the more dangerous it becomes, really.
yeah.
Because it's just like the internet. Once you teach the internet to be free thinking, and we're in bad trouble.
Yeah, right.
I mean, seriously, it's all connected. So once you teach your thermostat to think, just like you teach your car to think, we're setting ourselves up for failure in a bad way.
Yeah, it's like Skynet in the Terminator,
Mm-hmm.
right? That's the best artificial intelligence movie there. Actually, no, it's what is it? Stanley Kubrick, the one where
2001: Space Odyssey.
Yeah, and that was from like I think that was like the late 60s or early 70s.
Yeah, that was tripping, man.
Yeah.
HAL is a supercomputer.
Yeah, and I think you know, I did it was like 5 years ago now. I did a bunch of research, and you know, I got a computer here, and there's probably a bunch of old stuff sitting on my desktop, which one of these days I'll look at, maybe over vacation here. But yeah, I remember like reading about just how far ahead of its time that movie was, and you know, it's everyone kind of thinks like, all right, well, if you're on a spaceship, it's like at least at the current state of our technical understanding, if you're on a spaceship, it's like you're on the Enterprise. You know, it's like you can, you know, just kind of like, you know, sit down and walk around. But in real space, it's like you got the gravity. So that's why in the movie the thing goes like round and round, and you can kind of walk like you're on a. It's almost like you're like a gerbil on a wheel type of a thing.
Yeah.
All right. So anyway, what is Brandy saying here? Maybe an overreaction to the AI CEO firing. Someone had a puts through this. I mean, I don't know. It's kind of.
I looked for this, Yavi. I can't find that symbol. YE.
To me, this looks just. I'm sorry, Brandy. To me, this looks kind of neutral here. I'm just going to look at the 5-day chart. So here's our 5-day chart. Here's where we are this morning. You know, maybe looking for a reversal. This is a pretty clear support level here. So this goes back to Tuesday last week. So 367.50. That's pretty clear support to me. That's where I might start thinking reversal. Or let me just see here. Where is this? 366.42. Yeah, Yeah, I would be thinking reversal around here. This would be my trigger. And again, though, before we move on to whatever else, I mean, we could see more of our principles here, right? Resistance becomes support, support becomes resistance. I mean, it's pretty, it's hard to deny it when you can see it. I mean, not that people are denying it, but if if you understood what we're looking here, to me, this makes complete sense. How this what was resistance becomes support. All price levels are not equal. That's really just what it comes down to. Why does this thing turn at 367.50 and not 367.30? I don't know.
So YEXT, please.
Oh wow, that's pretty cool. So the thing just ran and ran and ran. It's like in Conan the Barbarian, right? When he gets abducted when he's young, and then he just spends his whole life pushing the big thing around and around, and of course he becomes Arnold. EX YEXT. EX. What's this? Not familiar with this one. Oh well, we must have looked at before because we got our price lines on there. All right, so now to me, it looks like we are at a pretty. Let me just get rid of this. And let me get rid of this. And let me change this color. All right, so we can see here we had a level that was this level. Let me just figure out what that is. We're going to call this 6 3/4, 675. So it was support, and it was resistance, and it became support, and now it's resistance again. So if it breaks above this, yeah, then we would be breaking into this gap here. So your next obvious area of resistance would probably be like around here. But yeah, see, it's not trading in the pre-market. So 676. So this is the type of thing where I would be thinking, all right, you know what? I'm not going to buy this, but if it gets up to like say 7, then I'd have some confidence that the sellers who created this resistance are out of the way. If buyers are coming into the market, there's probably a good chance there's not going to be a lot of sellers in these price ranges here, because one of the main reasons why we get sellers is when you get these remorseful buyers who are trying to get out at break even. But if you don't trade at the price levels, if there's no trading, then just by definition, there can't be people that were buying. So people might say, well, that news back in September was bad, but it's not as bad as the market originally thought. You can see it is kind of making this slow kind of a turn here. This would be under the old kind of rounded bottom type thing, where instead of a rapid change from one side to the other in a day, this takes place over like in this case, I don't know, 2 months. When you got to understand, right? These chart patterns are not mythical, magical. They're just things that happen to show up on charts that illustrate the dynamics of the trading that is going on. Here, the red team is in charge, but it's like this slow leadership change where the blue team is slowly taking over, or the bulls are slowly taking over. Whereas other time, and this shows up on a chart as what we would call something like a rounded bottom or around the top. Other times you get something like this, right? You could call this, I would say you could call this your rectangle pattern, a rectangle reversal. Now, let's just think about this from a logical point of view, all right? When a market's going higher, it's out of equilibrium. There's not enough supply to fill all of the demand. There's not enough sell orders to fill all the buy orders. So the buyers have no choice if they want to acquire shares, but to pay a little bit of a premium to attract sellers and off the sidelines. All right, it's at 950, I'll pay you 960. And that drives the price higher. When a market's moving lower, there's not enough demand to absorb all of the supply. This is basic supply and demand. Now, when we're in a range, the supply and demand are equal. So this is why these could be reversal patterns. We're out of equilibrium. All of a sudden, we go into equilibrium, and then we shift back out of equilibrium. So all a rectangle pattern is a trading range. And in a trading range, the forces of supply and demand are equal. So we went from being out of equilibrium into equilibrium. And then finally, the sellers, after this period of going back and forth, maybe some more sellers came into the market, and then we got back out of equilibrium. And now here, this is the old rounded bottom. Well, what does this show? Well, market's going lower. There's not enough buyers. But this shows the slow change as opposed to, well, I mean, a rectangle could be a pattern that takes a while. But you can look here and, you can say, all right, well, here's your old inverted V. In this situation, the trend or the leadership changed quickly. Over here, the leadership changed quickly.
So with these rounded bottoms, it usually gives the meaning of the move better meaning, right? It has more strength to the move, Mark, when it takes longer to move like that.
I don't really know. Not necessarily.
The mean less is just taking investors more time to adjust to ingest what they need to do with this stock.
You tend to see it in tech stocks and biotech stocks. You tend not to see this stuff because they're a lot more volatile. But if you look at some of the boring old companies, like the companies that make tools and things like that, over the long term, you tend to see a lot of these slow, rounded type and rounded bottoms. Most of the time, they show up on the longer term charts.
Gotcha.
Because it's a slow thing. You could see them, right here. I would say that from this point of view, this right here is your classic rounded bottom. And this played out. So we had this long downtrend that started in the beginning of February of 21, right? So trending lower. And then all of a sudden, April of 22, a year later, all of a sudden, the tide starts to slowly turn. So from April to October, it was like a 4 or 5 month turnover here. So that's your remember now we're looking at weeklies here. So this is actually a good example. Okay, I should actually write this down for later because I always forget what I look at. Yep. So when you are reversal patterns are about recognizing trend changes, something that's going up that shifts to going down, or something that goes down that shifts to going up. All right. When these changes in leadership are taking place in the market, the dynamics of the price action simply appear on charts as things that look like patterns. So this is the rapid change in leadership. This is the bears are just in control, and they just end up overdoing it, and they just end up getting overly aggressive, and they give away their shares, and you just make this spike right back. So this is a quick change in leadership. It just happens to appear as a V. Here we have a change in leadership, but this is something that didn't occur in the course of 3 weeks, like over here. This is something that occurred over the course of 4 or 5 months.
Gotcha.
So here, would be your rounded bottom. But this is why I tell people, forget about remembering the names. It's just understanding the change. You don't need to know that this is called a V pattern to see that the trend is reversed here. You don't need to know that this is called
a rounded bottom.
a rounded bottom or a cup, or whatever. But to see that the trend has changed, and that's all we're really trying to do is figure out if the market's going one way and it's about to go another way. Like right here, here's your classic V reversal here, and then you got your classic V reversal here. So this is a tech stock, right? If we looked at something boring, I don't know, what's the boring company? International Paper. I don't know why that came to my mind, but let's see what this looks like here. Yeah, so I mean, we still see the V's and so forth and so on. But like generally a stock like this, it's more of like a U bottom. We just invented one, a U. This is a more, you have more conservative people trading this than you do trading, say, tech or biotech. So it just makes sense that the changes in direction are just going to go slower. All right, Brandy. Yes, Thanksgiving. So Thanksgiving on. Oh, did you see that the Jets are playing on the Jets and the Dolphins? Well, you should probably know this because they're playing the Dolphins.
Black Friday.
So is that a new thing?
Yep.
Wow, that's cool.
That is. We need an extra day of football.
Although the Dolphins will probably win by 50 points.
Hey, don't jinx it.
Huh.
Listen, if they're under 500, we can beat the hell out of them. But if they're over 500, we're struggling. We got to get some action together there in Miami. We fumble fingers. We're not tackling heavy. We got a little bit of that work to do.
Well, the Patriots suck and the Jets suck. So
yeah, but winning by default is not winning.
CRSP. Oh yeah, look at that. This is the type of stuff that to me looks prime for for some type of a reversal. I don't know the news.
Well, it's right there at 70.49 in the pre-market.
Yeah, so it's right back up to this resistance level here. So I guess it ran up on this news here. But now, like, one thing to notice, all right, well, it's not going to go up forever. Eventually, there's going to be some kind of a reversal. So something you keep an eye on. I mean, maybe in 2 years, the stock will be $800 a share, but it's not going to go there in a straight line, probably.
Tell you what, when they ever get this figured out where they can take genes out and resequence them and put them back in you, man, that'll be crazy medical leaps.
I think they're going. It's going to get to the point where it's too far, dude. It's like, I don't know. At least in my opinion, it's like Mary Shelley and Frankenstein. It's like men shouldn't play God.
I agree with that.
The gist of her book, and she wrote it like 150 years ago. So there's nothing new, man. But yeah, that's I don't know. I mean, I'm not smart enough to know what the hell's going to happen.
Yeah, me neither.
It's just something about it. Just seems very because eventually it's going to be like hey, listen, you're pregnant, but guess what, when your kid's like 67 they're going to die of cancer.
Exactly. I don't want to know all that.
7 years they might have a cure for cancer, so maybe
that's
not.
it, man. I don't know. I don't think I'm going to find out if I I don't know. I think I'm going out the natural way.
I hope so, dude. God, I hope so. When my day comes, man, I hope the good Lord takes me quick. That's like the one thing I want. I want my kids to be healthy. And for my grandmother always used to say, she's like, I'm not afraid of dying. I'm afraid of living too long. And now that I'm getting older, I see what she meant. And God bless Grandma Putrino, man. She was up partying. It was around Christmas with my stepmother, smoking, drinking. It's like 4 a.m, and then like 7 a.m, they went into their bedroom and she was dead.
Oh, bonus! What a way to go out. She was partying to the end. That's cool, Mark.
Dude, she was the best, man. Yeah, Grandma was a party.
That's cool.
All right, everyone. I'm gonna hit the road, and I guess we'll be back tomorrow, and we'll see you all.
Guys, we are working on.
How long do you want to live? I would want to live as long as I can take care of myself. Once I have to rely on someone else, that's probably where I'd have to be like, all right,
Hey, we're working on a bear, guys. Take a look at this bear. Tell me what you think. We're working on another bear musk. This is going to be the bear that's going to be opposite of Buddy the bull. All right, guys, have a wonderful day. Enjoy your Thanksgiving. Well, we'll see you tomorrow, of course, but enjoy your Thanksgiving week. Good luck in the market.